Good morning to all traders and welcome to this Market Insights video. Today is Thursday. It's the 14th of January and markets see no political risks when it comes to the second and historical Trump impeachment. However, there is a lot, and actually I think we talked about this last week. There is fears that the impeachment proceedings are going to cause some delays on well-needed legislation of Biden's agenda, including, of course, stimulus. He is going to actually provide details today later on the session about how he plans to support the U.S. economy. And we should all actually hang on his words, okay? Now, yesterday, some turned to inflation figures in the US, the CPI. We had the month-on-month figures coming out at 0.4, but the core inflation, excluding food and oil, was 0.1 only month-on-month. So barely any inflation increase, if you ask me. But many, seeing the numbers, have hoped for a swift economic recovery. And if we take also the stimulus hopes over the past few weeks since the blue sweep, well, we saw a rally on the dollar. But the truth is that with yields rising, then we had Brainerd and other speakers, of course, of Fed talking yesterday. Brainerd, she said that the Fed is likely to keep untapering bond purchases until their QE, their inflation, and also unemployment targets are achieved. And trust me, this is going to take longer than many think, and certainly it's not going to be now, as many others actually say as well. Now, given also the increase in layoffs that we saw suggested by the NFP last week, and the core CPI was only 0.1 up, well, I think inflation is not going to be lifted at the needed levels anytime soon. And if only then that happens, we might see the Fed start tapering off the bond purchases. Okay, until then, most likely, and I believe, we're going to have, well, interest rates, of course, unchanged, right? But dollar being under pressure. Now, that said, yields fell as well yesterday, and perhaps it might be a good time to look at where yields are higher, and this is usually the emerging markets, okay, around this time at least. So we're going to talk about dollar against Mexican peso, against the Turkish lira, and also against the South African rand. We haven't looked at those pairs for a while. Dollar against Mexican peso first. Well, I'm looking at a W, X, and Y correction over here, right? So at the moment, we've done A and we've done B, and we have one last wave C in Y. Okay, we are down here. So that's it. Yeah, I'm looking at this as a leading diagonal, and I'm looking at this as an ABC in wave 2. So I'm expecting 1, 2, 3, 4, and 5. Yeah. Well, this is probably going to be 1. Yeah, 2, 3, 4, and 5. So excuse that. So that said, here's what I'm looking. First of all, if we take the Fibonacci extension from these points over here, yeah, we go down to the 18, around the 18 level. This is a 200 Fibonacci extension, and also is a 200 Fibonacci extension of waves 1 and 2, okay? This is why this makes a very good cluster, the 18 level, okay? Now, of course, first, we need to break the 18.50, which is the 1618 extension of waves 1 and 2, okay? This is most likely where wave 3 is going to finish, to be honest. Then we're going to get 4 and 5, if, of course, this pans out as I expect. Dollar against the Turkish lira over here. Let's go a little bit zoomed out. TradingView has changed that, how it works over here. It's a bit annoying, to be honest. Anyhow, we're looking at 3 and 4 over here, yeah? We are moving impulsively up, okay? I'm still expecting another leg up, okay? So, that said, okay, I'm looking at this as an A, B, and a C, okay? We've done 1, 2, 3, 4, with the alternation seems to be respected now, the rule of alternation. I'm expecting 1, 2, 3, 4, and 5, a leg down to around the 100 Fibonacci extension of waves A and B, which is around 6.40. Now, in case we break below that, we're going to have an extended 3 or extended 5. Most likely it's going to be the third one, yeah? And we're going to go down to 6.26. So this is what I'm looking here as well. But I doubt we're going to get down there, right? Because we are in an ascending channel, and I wouldn't consider any levels below outside this channel actually to be achieved in this current market. Dollar against South African rand. We're looking at WXNY. Oops, excuse me. We're looking at a WXNY here, yeah, for wave 2. And this is, of course, in Y, we have an A, B, and a C, as you can see over here. Wave C looks like to me as a 1, 2, 3, 4, and we're expecting another move to the downside for wave 5. Okay. Impulsive multi-structural wave 3 with an ending diagonal here and some sort of complex flat over here, respecting in both cases, yes, in both intermediate and minor degree, the rule of alternation. So I'm looking at this as 1, 2, 3, 4, and 5 for wave 1. Okay, so most likely we're going to break down lower fairly soon. We're going to get 1, then we're going to get 2, 3, 4, and 5. Yep. So I'm looking at the 61.8 Fibonacci extension here of waves from like 2 to 4, which is like wave 3 pretty much, with taking into account the correction as well. So 61.8 is what usually wave 5 goes to, 1428, or we might see an extension of this around 1340, which is right at the bottom of this descending channel. So down here, if we get past 1428, look for 1341 next, and then this is going probably to be, well, supported by signals on the RSI MACD, because we don't see them at the moment. Obviously, a huge reversal on the upside. Okay, so this is all for the day. If you like the video, click the like button, follow as well. If you have an alternative scenario in mind or a question to ask about my analysis, do not hesitate to comment, and I will get back to you as soon as I can. Thank you for watching, and we will speak again tomorrow.